Hello and welcome to Landy's Crypto Corner. Today is March 9th, 2023, and Bitcoin price is collapsing. Now the question is, what's next? Where is it going to land? Well, really no one can tell you exactly where things are going to land, but we can come up with some good areas of interest to the downside here. Now, for those of you that did watch yesterday's video, you'll recall that I had said Bitcoin was breaching the 200 EMA. It's possible that it could close below. It did. It then has since rejected in yesterday's daily candle and headed down towards the 200 SMA. So we had the 200 EMA, and I believe I said EMA earlier. I'm sorry if I didn't, but it's a 200 EMA. Bitcoin closed below, back tested, and then now it's headed towards the 200 SMA here on the daily, which is down below the second standard deviation, which means that we are getting Bollinger Band expansion to the downside, thus making the lower third standard deviation target a good wick catching area. You can see that's coming in right now at 19,300 or so. Just slightly below there, 19,290. It is going to fluctuate with price action. So generalized target there on the third standard deviation to the downside, or the lower third standard deviation in this case, as I do have it labeled here on my indicator, is going to be that 19,300 area as the primary target. Now, since we have, last spoken, the areas that I wanted to see hold up have broken down, but Bitcoin still remains above $20,000 currently. Now, it did take a little trip down below $20,000 to 19,780 on this wick low. And we are going to see if we can figure out if there is going to be any kind of bounces from here. And of course, talk about where the picture would potentially change, where a reversal might become possible. And in this case, I think it's going to be a little while before we see a reversal. But after losing this low over here, and of course we lost this low over here, if we come back here and we scroll out, and let me just get rid of this actually, because this is from a different pen program that I'm just trying out. We can see if we just look at where price is trading with our our pointer tool here, we can see that price is currently trading below some of these lower highs on the way down to form this low at around that $18,500 before getting a bounce back up to just shy of 21.4 there, or around 21.4, and then the dump off around the FTX collapse. So from the news event side of things, I don't really care what the news is. The charts already told us that this was a possibility. I did speak about yesterday if the $20,400 area, this low over here from the consolidation low on the way up, the first consolidation high into consolidation low, we headed higher, that the next real area, should we break down from there, is going to be around that 18,500 area, which, comes into alignment with this, this high. Well, that is gigantic. That's not what I want. Okay, that's actually kind of funny. That's not what I wanted. But sorry, let me grab this. So right around this high here coincides with this low area here. So you can get the idea of what I'm going for there. But basically, we're above the 200 SMA right now. I'm going to show you some different looks at price action that kind of show around the 19,200 area. And I know some of you in the Discord were also looking at that same area. So we'll take a look at a few different things here. First, we're going to go up here and remove the Landy Bands with trend checker here. And we're going to go ahead and yes, that's still going to be publicly released soon. I'm still kind of cleaning things up on the code front here. I am, there's still also some things that I want to implement there. We're going to take a look at the quarterly volume though. And that's something that I do think is worth looking at, some of the longer term volume structure, and specifically from the closed quarterly candles. So we have this was our Q. We're currently in Q1 2023. Oh, let's not move that instead. So we've got Q1 2023, Q4 of 2022, Q3 of 2022, and Q2 of 2022. So that was March time frame when we got the big crash in 2022. So now looking back at the volume profiles, I just kind of want to call out where we are, as we have lost, of course, the current quarterly value area low, which is technically a developing value area low. So this is not set in stone right here. Now you'll see the dotted lines are the previous value area lows and highs from the prior quarter closes. So in this case, we are currently sitting at just under our value area low of the current quarter, and we are sitting below the value area low of the quarter 2 of 2022 closing quarter. So that gives us the bias that our quarter 4 of 2022 value area high is going to get tested, and that is coming in around that 19,239 area, 19,200 to 300, to just kind of give it a range, as it will be a little bit different depending on which exchange you're charting this on. So this is just a fixed volume profile tool, and it's pulled over the quarterly. I just marked off the quarters with a horizontal and then came here and pulled them over. So because this is a developing quarter, we're not going to know where the actual value area low is going to be until the quarter closes. It won't be finalized, basically. It could end up being this area at about $21,000, or just shy, I'm sorry, at 20,900 or so. And if that would imply that if price does auction back above 20,900 back into the quarterly value area low before the end of this quarter, which is the end of the month, then I would actually expect, test back up to retest these lows. Now, of course, that would be getting back above around this 20,600 close open down here as well. So it's actually coming in right here at, let's correct that and make it a yellow line. Overhead here is going to be the close open there is going to be 20,675. So price back above there. Not out of the question that we go test around that 20,895, 20,900 area. If we do see a daily close above there, then I would be looking back to the upside, where we have the intersection of that consolidation high with the low, that higher low that was put in before the higher high. So that would be to the upside, looking at around 21,600. So 21,500 and 21,600 if you're taking the wick lows. And of course, taking the wick lows over here, we've got 20,370, which price is trading below right now, and to get a back test in lower term timeframes and reject it. So when looking at the horizontals that we spoke of yesterday, and we'll turn off the ones that I just spoke about just for a moment, we can see that after losing the 21,366 low, price very quickly came down to test the 20,370, 20,400 low, and it actually closed under there. It closed under there by $2.99. And this, begat this daily open to come back down below and fish a little bit deeper for orders. So what this would tell me is that if this current daily candle did get bought back up above that 20,370 wick low area, we can again look to the areas that we just marked off. And that would be this area first at 20,675, then the quarterly value area low at 20,900. Then I would start looking a little bit further north if that is if those areas are regained, especially on a daily close. Then we can start looking back up into 21,000 to 21,500 area around the wick lows here. coming in at that 21,386 to around that 21,630 or so on that higher low structure. Now, that's really short term. If this gets continuation to the downside, which it is looking more likely that this will get continuation to the downside to test a bit lower, maybe mid to lower $19,000 area, even down to the $18,000, 18,500 area that I spoke about previously, we can kind of gauge that based off of some trend-based fibs and a regular fib. So if we do go out to the weekly and we run a fib from the higher high to the last lower low, so we've got our most recent lower low to the most recent higher high, you'll get a fib structure that looks like this. So right now we are targeting, guess what? The 382, and that's coming in at 19,214. Well, isn't that funny? Because that's also right around where we have that quarterly value area high coming in. So when looking at from the daily here, is where we're going to see that. And that would be this quarterly. That's their Q4 value area high there at 19,214, coming basically right in line with that quarterly value area high. Not far off, just a little bit there, but that is a confluence for that area. And then of course we have, structural support down here at around that $18,500. We also have the highs of the range below us, that major low area. And, below $19,000, that area is definitely going to get tested. So now I will say that below there, it's going to be a trip back to the lows. It's going to be a trip back to retest these lows as a major low and possibly even a macro low support. But, it is looking as though price does desire some lower prices. Now, again, back above the, you can see here on the fib here, back above the 50%, we can start looking to where? We can start looking to that 618 at 21,500 as kind of the average area in and around the structural support. The prior structural support now would be resistance. So everything's kind of lining up with the fibs. We've got a perfect tap back there on the 50% and that 618 holding up price here. So our support resistance areas have confluence with our Fibonacci retracement here. And that's both to the upside and the downside. So we are seeing, the fib also lining up with volume profiles as well. So I'm fairly confident that, back above that 20,375, we go and we test further up into around 20,900 to 21. Above there, retest of around 21.5. If that area is regained, great. We can go up and test somewhere in the 22s. Where does the picture really change though? Well, the picture doesn't really change on price action here until we see a daily closure back above this last lower high now. So this last lower high, excuse me, which is below the current quarterly point of control, but it would give momentum quite the pop on some of the longer term time frames that it would need back to the upside. Of course, I do think that we're going to chop around. If we are going to set a low around here, we're probably going to dip down and then chop around and then try to carve out that low. Now, currently, if price did pop back up above 22,654, 22,660, then, I do think the highs get ran. Wouldn't necessarily call for a break of structure of the actual structural high up there. Instead, I would be looking at more of a range play. So let's go ahead and take a look at a couple things here just as confluence yet again. And then we'll go ahead and get into some of the momentum pivots and take a look at RSI. So looking at a trend-based fib, you can see that we have our higher high to the, in this case, higher low to lower high. And we are looking at the extension down to where price is currently sitting, down to around that 1414 at currently trading below the 1414 with targets down to guess where. I generalize these targets typically on fib extensions for the daily. You'll typically see in and around the 1618 to 1786, and that's coming in right around the zone that I just pointed around that 19.2, which is basically your midpoint between those two. So when looking at, where we've currently, where we've previously talked about, where price currently is trading at, if we do get a closure below the 1414 here, we would be targeting around the 1618 to the 1786. And of course, that quarterly value area high coming in there, right in between those two. So good area of confluence. Now, this also would line up if we take and utilize this fib to look at the support and resistance to the left and where things might find some confluence here. We will see that the 2-spot extension is hitting the actual low of this overall range before heading down to that lower low range, at that major low. So there is some confluence there as well on a trend-based fib that we could also see things head down to that 2-spot extension, and it's coming right in line with support areas. You can see that down lower, the 272 to the 2414, grabbing at around the top side of this range. And, that 2-spot extension just a little bit higher than this wick as well. And we do need to account for wicks when price is moving this fast. So, and of course, the 3-spot extension off of there, coming right in there and catching those lows down there. So, the primary targets to the downside, right now I'm looking at 19 to 19.5 as a generalized target. Get down into those lower term time frames, and that's where you can really do your analysis when it does get to those areas, and if it does get to those areas, and see if it's worth taking a counter trade against the trend, which I would be very careful about right now, as I do think that there's a lot of longs coming into the market right now. Open interest has been increasing quite a bit in some of these areas after getting wiped out. So that does mean that shorts are well protected and well insulated up here on the highs, and they can squeeze those longs out on the way down. So, and if the area there at 19,000 to 19,500 as a generalized target gets taken out to the downside, then we're looking at $18,500 to $19,000 as the next big area, and then below there, well, below 18.5, we're back running the actual major low down there. I do think that will provide for some very, very nice bounces and possibly turn into some longer term opportunities, but it also does open up the door for much lower than this major low. So keep that in mind. When we look at the structure of the Bollinger Bands here, I got to say that I do think that there's probably going to be a bounce sooner than later. Now, you'll note that this particular candle that we have in today's current candle does have a red diamond and a yellow label down. That does denote that you'll see that there's a floating label here, but there's no line. That's the 9 EMA has closed underneath the 200, signifying a trend break. So what would constitute follow through for trend to the downside? That would be the 21 EMA trading below the 200 EMA. So right now we are in a transitional period with price action. That's what that is for, is we don't have any green diamonds. We have a single red diamond with a yellow label, which is a trend shift candle, or a possible trend shift candle. And follow through will happen when we start seeing red diamonds printing, because that would denote that the 21 EMA is below the 200 and the 9 EMA is below the 21. So now a little bit of a counterpoint to that is when you start seeing these purple diamonds populate on here, that is signifying that we are below the second standard deviation. And in some cases, you get the triangles. Those are warnings that you're trading outside of the third standard deviation, either to the upside or the downside. Now, in this case, this is a fairly strong trend right now, but you can see that Stoke is riding the floor. So I would say it's more likely that we're probably going to see a bounce in the lower term timeframes, but I wouldn't get too excited about that and until we're back above the 200 EMA on the daily, coming in at 21.8. And we could test up to around that 21.5 as I had shown you. That is the 618, but it's still below the 200 EMA. Still wouldn't do much for price action. And I do think, while we will see some further downside here from the daily, we're probably getting pretty close to, at minimum, an intraday bounce. And then we kind of see where things land from there. But being stuck in between the two 200s here, the EMA to the upside and the SMA to the downside here, you're going to get lots of algos trading off of these two areas as well. Unless things just kind of liquidate a bunch of longs on the downside here and get convincingly below that 200 SMA there at 19,700 and don't get bought back up. Now, again, all of these different confluences with this third standard deviation, the quarterly value area high, the Fibonacci retracements from the weekly, that being the lower low to higher high fib or higher high to lower low fib, all coming into alignment here with this 19,200 area. That to me is going to be the area to watch should price start trading down towards there. Now it's gotten fairly close intraday already, and we'll see if that has any more on it. And we'll follow up with it, of course, tomorrow and the next day, so on and so forth. When looking at the Stoke Momentum Pivot, that is sitting now at 20,300. Well, that's interesting, as 20,375 is the 50% that's coming in with the wick low. So if we do trade above and close the daily above that 20,300, specifically this daily closure, then I would be looking for a wider move back up, because that would be just shy of the 50%, which is also the low here on that on the daily chart, the immediate low above us. So regain that resistance and flip it to support on some of those lower term time frames. Of course, we'll get some price action testing back up. Now, when looking at above the second standard deviation as well, 20,500, if we can trade above there, then that would also be another confluence that we're going to go back up and test that 618 around 21.4 to 21.6 area, and possibly retest that 200 EMA, which happens to be lining up perfectly, or almost perfectly, I should say. It's not quite perfect, with the lower first standard deviation. So the first standard deviation to the downside, if this is going to be a strong trend down, what you'll see is price will kind of go sidetrack sideways and then bounce back towards that first standard deviation, and then reject it, and then begin to resume that trend to the downside. So you can see that playing out to the upside here, with the first standard deviation kind of coming back intraday, and then on the consolidation high, coming back down towards that first standard deviation again, almost tapping it there, using it as support here, kind of trying to pull away from it, falling back in, and then again back up. So if we're going to see that strong trend, you're probably going to see a back test back up there. Now, when that's going to happen, I don't know. You're going to have to gauge it based on some of the lower term timeframes, which we're going to get into here in just a moment. But 20,300 having a confluence right around that overhead resistance now with that low that was just lost. If we do see that in the next daily, then I would be looking a little bit further north. Now, the 12 hour is going to be 20,196, so 20,200. as the momentum pivot. The 8 hours at 20,587. The 6 hour trending down here is at 20,212. The 4 hour 20,095. So basically above 20,100. And let's take a look at the 4 hour here. So there's no chance for bullish divergence here just yet. We do see that it has gotten quite a few closures outside of the third standard deviation Bollinger Bands. Now it's being pulled back in ever so slightly here. So from the 4 hour perspective, you can kind of see what I'm talking about. We'll kind of trade outside, but Bollinger Bands continue to expand. When looking at BBWP, we can see that we are still headed up on volatility here. So we're going to continue with this expansion to the downside for at least, the until that BBWP starts to turn back down. Now in this case, coming back up to around where it's telling us the 9 EMA is. That's coming right in at the 4 hour first standard deviation to the downside, but that's almost at $21,000. And if we saw a bounce to $21,000, probably pretty quickly going to go and test around where the basis is. And right now it's at around 21,700, 21,695, 21,700 area. By the time you'd see any kind of a bounce up there, unless it just elevated up, which I highly doubt from here, then we'd probably be looking at, around that 21.5, which all the things that we've just talked about, but still an area that could very easily reject price, but it also would trap a lot of bears down here. So keep that in mind. When looking at volume, we can see that we are getting a lot of volume, but this is not anything crazy. We're seeing more clustered volume on the way down here. And it's not, to set a low, we need, at least to equal some of these bars that actually set lows, and we're not there. So I would say that, even from the daily, there's not much. It's the volume is trending down even on this move down. So, we're not seeing a big pop in volume. If we see a big pop in volume and price fails to push down any further, then I would be confident in saying that we probably have at least a short-term low, and I am not seeing signs of that just yet. So what it really comes down to is beware if things pop up to around 21.4 to 21.6. So you want to make it easy, just call it the 21.5 area, as that is a bearish retest and could possibly reject and head lower. And unless we see price trading back above the last lower high, at least from here until it establishes either another lower high or it starts to form a low and then a higher low, around that 21,650 area, or 22,650 area, anything below there is still just structurally going to be a downtrend. So things won't get interesting until we see price trade above there. And then to the downside, of course, we've got that 19,200 as being a very, very big area of interest. So generally speaking, targets 19,000 and 19,500. We've already kind of breached below 20K. So we'll see what happens from there. And actually, it looks like we might even head down a little bit further here and test that while I still am recording here. But that's going to do it for me today. I could go into some of the other time frames. I don't think it's really worth it right now. This is a move that's in progress, and until we actually see it slow down, BBWP is expanding on the daily. We see BBWP is expanding on the 2-day, still downside below 22,900 or so. And we're gonna get a 3-day, 5-day closure here pretty soon. So we've got the 3-day closing with today's candle. We're seeing expansion off of a pretty low read here. But again, because of the way that I see the 3-day bands structured, I think we are looking at a possible bounce, at that lower second standard deviation, a lower third standard deviation. Now, I would not say that the bounce is going to be like, oh, okay, now we're good to go to a new all-time high. Like, absolutely not. And in fact, I do think that a bounce is going to be heavily sold into. So we'd have to wait to see what happens when things do bounce. And, I think that we are getting there, but, that could come in from the 3-day perspective as low as that 18,145. It's rare on the 3-day chart that you see closures outside of the third standard deviation to the downside. And just to kind of give you an idea, when things are headed up on the 3-day, so we're expanding price to the upside here, for instance, back in 2021, and then we come all the way back and almost tag the second standard deviation to the downside, right? Nearly there, below the first standard deviation. What are we looking at right now? We're below the first standard deviation, nearly touching that second standard deviation. Yes, it is a different scenario. The look is a little bit different as well. We can see that coming off of the lows in, and this would be on the more concerning side for those of you who are bullish, but off the lows in 18, 19, when we pumped up and we put in that lower high on the monthly, on the 3-day we came back and we started to breach below the third standard, or we breached above the second standard deviation, nearly the third standard deviation rather, to the upside here. When we came back for the retrace, we got our closure below the first standard deviation on the 3-day to the downside. We got that bounce up, and that was immediately sold into brand new lows and began that downtrend that makes, for me, by the way, this March 2020 was not a black swan event. In fact, across markets, you could see that this was coming from a structural point of view and a trend point of view. So just lower highs everywhere on some of these medium-term timeframes and weekly timeframes, especially on Bitcoin. We had a weekly and a monthly lower high. So, that did beget that further downside that led to, maybe it crashed deeper than it would have. That's, neither here nor there. It was definitely going to continue to head down from the look that we were seeing at the time. Although many still call this March 2020 a black swan event because of some of the other things that were going on at the time. But in this case, this is the danger scenario for Bitcoin right now. That 3-day begins to turn. We see a closure below the first standard deviation. We pop up and we see a big sell-off to another lower high, or to a lower high in this case, because at the moment we have higher highs. So we have our first structural break on the 3-day. So that's going to be closing with today's candle. We're going to be looking at 24,444 or so as the momentum pivot. Obviously, that's the high. Got to form a low before we can even think about where price would head next. But what I will warn you of is that the overall targets are coming in down quite a bit lower from the 3-day perspective. And then, of course, you start pairing that up with the 5-day, losing the 20 simple on the 5-day here. If this is an area that is lost and closed below, and that's 20,280 on the 5-day, we're looking at the first standard deviation to the downside as being the next most probable area. And on the 5-day, from a structural point of view, we've got confluence right there. And, that's not going to look good for the bulls here, right? Like, we got the lows, we've got the highs coming in here, just below that first standard deviation to the downside here. Now, again, I still, do believe that bouncy area first and foremost when looking at this, but it's not, doesn't look great right now. And then, of course, from the weekly perspective, we went up and we pinned the 200 EMA and SMA and the upper second standard deviation to the upside. What I will say is the weekly 20 simple coming in here at this 19,714 area. So we do have some confluence for supports being in this area around the 19 to 19 and a half zone. So that is something that we will monitor, and then I'll follow up with this analysis tomorrow, see kind of where the daily lands as we continue to trend down in some of those lower term timeframes towards this 200 SMA. that's going to be it for me today. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And as of course, as always, stay safe. And if you did find this content helpful and or enlightening, if you learned something and you'd like to share it, that would be great. If you could also give me a like and subscribe, that would really help out the channel, help me grow, and get more of this style of analysis out to more people. And yeah, I appreciate you listening, and I will talk to you soon. Landy out.